there was one of these risk off events that something hit news. And the funny thing is, I don't know what it was. I could go back and, look through the news and find something. Oh, that must be what it was. But the interesting thing is, I don't need to know what it was. I don't need to know any of the economic stuff. In spite of all the stuff you may hear from other people, there may be people who will swear that you can't trade at all by technical analysis. The only thing you can do is to look at all the news and the economics and make a decision based on what's going on with that. And okay, for them, they can't do it. But for me, that's the only thing that does work, is to look at charts. So it will always be a funny and amusing thing to hear people say the things that they say, especially in the trading world, where people, they just get so stressed and take things so personally if what they say is in conflict with what anyone else is doing or believing. But what I notice is, when there's a risk off event, the first thing you will see that the yen will increase in value. And so if you see a sharp turn on the US dollar yen, and then you see that it's consistent across yen pairs, where the euro yen is dropped, and then the pound yen dropped, the Canadian yen has a sharp turn. You can see it's definitely a yen turn. So when that happens, you can also look at, I would immediately go the stock market and then see what is happening to the stock market. Which these are not the charts that I normally use, but I could set this up so that navigate from one to the other. So here's the S&P 500. This point right here is the same point. Well, as you can see here I have overlaid the S&P 500 onto the chart of gold and inverted the S&P 500 so that it is directly in correlation. And you can see they're almost identical a lot of the times. Not always, so you can't just rely on that alone, but many times when there is a turn that we know of as a risk-off event, is change in the market sentiment, where suddenly everyone is not willing to take risks on investments like stocks. And so they pull out of stocks, go in, pull out of stocks, they go into gold. That's what people want to invest in when everything else is too risky. Just buy gold. And then you'll see a turn in each of those markets. A lot of this stuff you want to maybe see after the fact, but what it can do for us is to help us to confirm the turning point seeing. Because if you look at several pairs or equities that are similar, correlated, you will see emerge out of several of those similarity in pattern that often will illuminate your eyes to see key pattern recognition things that enable you to see what's known as a turning point. So what's known to me as a turning point is something that normally is an unmistakable phenomenon, and that's why the whole rest of the time you can see this on any time frame. Like if I go here to the 4 hour, you will see there are turning points on the 4 hour. Some of these you can see should be tuned shorter time frame, like the 2 hour, where you can see this is a perfect classic shape trend on gold, and then overlaid over the top of that is the exact same perfect shape of the S&P 500 inverted to be in the same direction as gold, so that it fits right on there. Now, normally I don't trade with these overlays on my chart, but when I'm doing analysis, I might put one on there in order to help me to clarify something. And the more you clarify these things, the more, even right at the time when you may be making a trading decision, you can look and see gold is turning. What's happening here? Oh, okay. So let's see. Is that consistent? Is it? I look at the yen. There's a turn on the yen. Let me look at all yen pair. Okay, that's a yen turn. That's confirmed. That means there's a risk-off move. And then, okay, the gold is turning. Okay, now I can get in. Or maybe I jump over and look at the stock market and see, oh yeah, I can read that on this time frame, and I can see that's a turning point on the stock market. So that means it's time for gold to go up. Now I get in. And I can do that all pretty quickly, and just as a confirmation, because when you're trading, you've already been looking at the charts for a long time, and so it's not like you just open up your charts and all of a sudden you're trying to figure out what's on there, because you've already been analyzing them ahead of time and preparing for the turn. All you're doing at that time is confirming whether it's a turn or not, because once you have that ability that people in our group have developed, which is the ability to actually identify turning points, and it's amazing that so many people in the trading world don't know how, and it's actually kind of sad to see that people are struggling so much, and they don't even know what a turning point looks like, and it's right there on your charts. And you would think that more people who are professionals will be able to look at these things and identify turning points across all time frames the way that I do, the way that people in our community do. Now, I couldn't say that no one in the world can do it, maybe, but there are people who are able to do it, but it just doesn't seem to be that there are that many of them. I look around and see my own experience of what other people are doing. Most of them are kind of lost. They don't know what turning points are and what constitutes a turning point. What does it mean if the market is forming a turning point, and on what time frame? Because when I see a turning point, I have an idea of where it's going to go from there based on reading the pattern on all time frames. I may not have to know exactly what it's going to do, because after the turning point, the market will in drawing the rest of the picture. After it draws in the rest, you could be in a trade. After it draws that in, you say, oh, okay, this isn't the turn that I thought it was, so I guess I'll just have to get out with profit. That's the ideal situation. To show you many examples of what I mean by that. There could be a time when something is turning, and the expectation could be that on one time frame is going to start forming a trend going up, and then you observe after you get in that, oh, it's not forming a trend going up, it's correction that changes the pattern. See that it has formed a correction. Oh, okay, I'll just get out with profit. Got a question from someone that was relayed to me, but that which is more sensitive to risk on gold or the yen? And what I have seen is when there is a real risk off or risk on change, that you see it simultaneously, almost equally on both of those and on the stock market. And the yen, just a few minutes ago, I had the yen on. I can put it back on here and I'll show you what I mean. If I take this overlaid instrument overlay, I can just change instrument, then click and it will update to a different instrument. Now it's showing you US dollar yen. Look at that. That's like exactly identical, but only this part of it right here, just this part of it happens to be exactly identical. Certain time frames is not exact the same. So if I go out to a longer time frame, do charts show which is more sensitive? What would sensitive be in a display on a chart? Because sensitivity on a chart would be displayed as impulsive price action. And if they're the same, then that means they are the same. So that's a good question. And the thing that I have noticed is that you can't necessarily rely on instruments like gold and US dollar yen. It would be better to have a yen index on here, which I don't have on this chart. But if you have trading view, those are really nice. And the instruments that you have available on those, just for the regular subscription, gives you all these things. You can put the yen index on here itself. So what you'll see is that if the turning point is at the same time, and if the impulsive candle that forms is about the same, then they're approximately the same amount of sensitivity. But when you go to different time frames, you won't see that they are exactly correlated, but you will see when there is a turn, there's almost always a turn. Both. I was looking at this earlier. It looked different to me for some reason, but I was noticing that there were major turning points were lined up exactly. Then in between the turning points, they might drift off in not being exactly correlated, then come back together for another major turning point, so that at all the major turning points, they were exactly spot on, but in between, they would kind of do their own. Okay, you're going to notice that stuff if you just look at it. But how can you use this, especially on the fly? I could sit around and analyze things and notice how they're similar, but how's that going to make me money? How's that going to make me have more profit and have more consistency trades? The way that it is useful is, like I was saying before, that when you look at multiple pairs of correlated pairs that have some kind of a correlation together, you should see patterns. And this is how I trade, is I read patterns. And to me, that is the only way to trade. But I realize there are many ways that people go about this process, and they may be able to consistently get profit by not reading the patterns, doing something other than reading what the market is actually doing. But for me, it's about reading what the market is doing. So like I say, normally I don't have these things on there when I'm analyzing. I wonder if there's a, I'll just take it off. So normally I'm going to take just, gold, whatever it is that I'm looking at. Then from longer time frames to shorter time frames, analyze it. And what does this look like right there? I mean, that just looks like ABC correction. That looks like an end of a correction. Then after it did go up in an impulsive move, but hasn't taken out this high yet, then at this point it's uncertain, but it should still be on track to continue the uptrend. So for instance, if I go from that time frame to the hour, this is continuing the uptrend. I would expect on this time frame, maybe it's going to go down here, form a C, then form an end of an ABC, another turning point to go up. That's what I would expect. Now, if it didn't do that, that wouldn't cause any problem or anything. That's just the most probable thing that I would expect. And then I would make a note of that, notice that, then go look at other correlated pairs. And what has been the real biggest breakthrough ever for me is not comparing gold with the yen or comparing gold with the stock market, things like that, but comparing gold against all the other currencies. And a lot of trading platforms might not have those. Again, if you have TradingView, it's got those standard on there. You can look at all of them and what I'm talking about. And don't ask me why, but for live streaming on YouTube, I've only set up to show these charts. And with the streaming platform that I'm now using, I can't just go in there and throw another one on there. I have to go back and set it up, and there's a little bit of technical work to that. So maybe I could do that for a future one. But on a different platform, I have gold against the euro, and gold against pound, gold against the Swiss, gold against the Aussie, and then silver against all of those. Also, when you take those, you know how to read the market, which is a fascinating thing that I love to share, the insights that I have gotten over years of observing these things and then discovering things, and kind of using my artistic background to have a keen sensitivity to shapes of things rather than thinking about the market in terms of formulas. And a lot of people automatically are more inclined to use the left brain and the logic brain to think that looking at charts should be something about formulas, lines, and things that involve numbers, math, and that's fine. That's fine. But to me, you can see these things. It's like you can see it just the same as I often mention as, a metaphor or an allegory, that if you go into a garden, you see a tomato plant and a cucumber plant and stuff. You can see it. You can just see there's a cucumber, And just like you can say, here's a trend. That's how do you know? How's the shape of a trend? And if you go in and out on longer and shorter time frames, the whole thing, there are things that will emerge once your eyes are trained to recognize them, that you can see things and know there's a turning point. That means that this pair is now going to do this. And then you can develop the ability to only get in when one of these turning points is happening. When you do that, oh my God, it just changes everything. Because before, what you may have been doing is something other than that. What it often comes down to is you're looking at charts, and then you're kind of expecting that there should be trades, and then you're just making up a reason to hey there, Bill, how's it going? Only able to see this comment through my assistant here. But yeah, it is a very amazing thing. And Bill is a excellent trader also, who has a lot of those understandings that come from different types of left brain approach combined now with the right brain approach. And I think that when we're looking at charts, we're using our analytical mind, our logical mind, and we're also using the right brain creative part of the brain. And that enables people to have a whole brain approach trading. If you can maintain that, if you've read the book Trading in the Zone, then having that whole brain approach, although that's not really what his thesis is about, but the book Trading in the Zone, I'm just now reading after all these years of hearing everybody say it's such a good book, and I was saying, yeah, that's a good book, all right, looks good to me, but I haven't read it. So then I'm reading it, and now I see why so many people have been able to change their approach to trading after consciously and intellectually learning how to trade, but still not able to pull it off because of these unconscious blocks that make people do things based on fear and anxiety and or greed and excitement. You don't want to trade because you're excited, because you can get on a roll, have a bunch of good trades, then you feel invincible and you think that, yeah, I could just do anything. Then next thing you know, you feel like you're doing the same thing that you were doing, and it just becomes a disaster. Then that causes pain. Then you're trying to trade based on avoiding pain. So the successful trader learns to trade not based on any of those things, where you can develop that in the zone mindset, just get into trades over and over and lose some of them, win some of them, but win more of them than you're losing. Have it work out excellent. So anyway, gold has been one of my favorite things, and I do empathize for people in the U.S. who don't have gold. It doesn't matter that much. Just another currency pair, and there's nothing that special about it. And so if you don't have access to it, it's not like gold is a secret. I just think a lot of people are interested in gold, and it's kind of addictive. So we can do the same thing on the euro versus the dollar, on the pound pairs, as we do every day. Although, the pound is getting to be kind of challenging from all the uncertainty that's happening. And hopefully soon, something is going to resolve with the pound, with the UK. I hope that the best, what's best for all the people of the UK ends up happening one way or another. Then we can get back to normal business. Not that the Brexit has taken away our normal routine, because it's still there. And so if you understand a little bit what I was talking about here, we're just barely getting started with how do you trade any financial instrument, but it is so much fun once you are able so that's one of the secrets, is that I've noticed that gold is exactly opposite of the S&P 500 and the Dow, and often the opposite of yen pairs in general. See that what I was just showing was the US dollar yen, but much better if you have TradingView to overlay the yen index. But we've been looking at the yen index and have discovered that it's almost exactly the same as yen, but you could compare those two together and just see how different are they. So when you're looking for correlations, you don't want to even think about the mathematical part of that, because I've seen articles and tools that are designed to show these two pairs are 71% correlated. How the hell would you ever know that? And would they be 71% correlated the next day? And on what time frame are they that? And because we're not talking about a mathematical thing, we're talking about how are they similar from an organic perspective of how they are look similar. That will enable you to have new insights or discovering the hidden patterns. They shouldn't really be hidden. They should stand out. And that's another thing. As a bonus, we're talking about the US dollar today. And I was trying to show, and I hope that a lot of people are understanding why I'm showing it, why it is that often have focused on pairs that might be considered exotic, like the Norwegian krone and the Swedish krone. When I'm analyzing the dollar, same thing as trading gold, I like to start with the dollar index, and we have two versions of it. One's the DXY, which is a common version of it, and we just happen to have discovered that, it's known. You can Google it, and you can see 75%, I think, weighted to the euro. Then the non-weighted index is, I think, non-weighted, but it's a different instrument, and it's available through FXC. In fact, often I see it called the FXCM Dow Jones US dollar index. And again, sorry to to see that FXCM had to pull out of the US and had to pull out, and then you lost access to their proprietary trading platform that a lot of people actually preferred to use. And then that whole, I don't want to get into that, but you know, the FXCM is still in the UK, and for some reason the UK, which is more highly regulated than the US, didn't have a problem with it. But a lot of people still consider them to be a good broker in the UK. That's neither here nor there, but what we're talking about is the non-weighted US dollar index, which is this right here. And I study this thing every day. We all look at it and compare the pattern that we're seeing, try to figure it out. It's not always easy. But there is a key that when you're comparing the patterns together, you'll get insight, right? You'll get insight so that what may have not been obvious to you will start to become more obvious. And you'll look at something and go, oh, so that's what that is doing. Now I can see this one over here and this one over here, and this one was kind of weird and messy, and then this one over here kind of clarifies it. So now I know what this one is doing. Look at it again and go, oh, so now I know what this one was doing. Before I didn't understand. So when you look at these patterns every day, you will notice things, but especially when you're looking at a group of, so as most of you know, for instance, the US dollar Swiss has kind of gotten to be different from other US dollar pairs when you're trying to see consistency in the pattern. Kind of searching for where's the consistent pattern among a group. It's kind of like searching for that the core index. That's sort of what we're doing, right? We look at the dollar against this one, we look at it against this one, we look at it against this one, we look at it against a basket of currencies, then we look at it against a basket of currencies that's weighted, and we look at a basket of currencies that's not weighted. And what we're doing is we're searching for the clarity, if it's there, and usually among the group of pairs it will emerge. See it. You'll see that there is a pattern. First of all, it is consistent. When the next thing that realizes that you just have to identify a turning point, you don't have to have correct labels for all the patterns of these correlated pairs. You're just looking for when's it going to turn. So that kind of simplifies things, right? When you look at it that way, that's what I do every day. So that's why if you look at the US dollar index and then you look at the non-weighted US dollar index, then it's not this way all the time. But as of right now, I considered that this Norwegian krone, US dollar versus the Norwegian krone, and US dollar versus Swedish krone gave us that crystal clear pattern that we were looking for, which enabled me to get short on Swedish krone Um, since yesterday, I was anticipating it. It didn't actually turn. Was able to stay in it. Moved the stop loss up a little bit to let it have enough room to complete that turn. It can be risky moving your stop loss after you attempt a trade. That's debatable. Like, and there are cases where if you do that, you could get too negative trade, and some of them won't ever turn. You think that they're going to turn, and that's a big part of what we do, is try to develop that visual skills so we can tell the difference. So those of you from our group, you probably, maybe you know this so much that it's just embedded in your brain. But this pattern right here on 12-hour, 8-hour stood out so much for the classic clarity that I was attracted to that. That enabled me to identify the turning point, dollar, in this case, be in it before it made the turn, because you could see that it was trying to make it before. That's kind of a typical thing to happen. Anticipate something's going to turn. This one is just fabulously beautiful. Norwegian krone, 8-hour, and hopefully you can see why it's the 8-12 hour in particular where you can see it. Other time frames you won't be able to see it. So now I'm in that, and I'm expecting that that's a major turn. But the next thing we do, we come back and we observe them all again to see what kind of a pattern is it going to do next. I may already have a pretty good idea what I think is going to do, but then come back and you look at all the correlated pairs, observe the pattern, then confirm, yes, it's doing what I and it's doing something else, and then get out. This is fantastic. I'm looking at this now and I'm thinking, when I was looking inside the trading platform earlier, it's like, wow, that's already very profitable. But I'm not getting out of that until I see, if that's a turn on the daily. If it's really a turn on the daily, then I maybe should be in it for the next several weeks or months. I always say that, but then I don't always end up. Okay, so I hope I wasn't rambling too much, but that I did reveal some things that could help you in your trading if you apply it. And if you want to know more about what really works in trading, go to tradingmastermind.com and we'll get you set up with some free training that will point you in the right direction. You can just start to look at things in a way that would open things up for you, and you can start to see how markets work. Then if you practice it over a period of time, you will know how markets work. Still ends up being challenging, but there comes a point where you reach a plateau, and that's that now I forgot what the term was that Mark Douglas used, where you reach a level of consistency, and when you see that it's becoming consistent, not just from your understanding of the analysis, but from your ability to do trades, because the mind will play tricks on you. You may know what to do, but your mind will, you don't realize what's happening is that you have been starting to do things based on consciousness and fear and anger and all. So, yeah, I got to get going here because in just a little while I'm going to be in our next live session for the New York session, and hopefully, if you guys are lucky, may get a chance to trade alongside some of these people who Bill is one of the main experts now. And as I'm reading the book, I don't know if he's still here, but as I'm reading the book by Mark Douglas talking about having a winning mindset, then I'm noticing Bill. I'm thinking he's got that. So maybe he'll explain more. Is that just natural, or did you have to do something to your mind to get that? Because not everyone, I mean, most people don't have the type of winning psychology that's needed to make it work in trading. So a lot of it is just having that right mindset. So anyway, look forward to seeing you in the next session. And if this generates